Welcome to This Explainer. Today, we are jumping straight into a topic that occupies almost everyone's mind at some point, but one that, honestly, very few people actually know how to quantify. We're talking about wealth. But look, we aren't going to sit here and just daydream about luxury cars or private islands. In this analysis, we're going to completely dismantle those vague, fuzzy wishes people have about getting rich, and we are going to replace them with hard, measurable numbers. We're essentially transforming financial philosophy into pure financial mathematics. So, let's get right to it. It seems like such a simple question, right? What does it actually mean to be rich? But here is the fascinating reality. If you walk down the street and ask 10 different people this exact question, you'll absolutely get 10 wildly different answers. For one person, it means reaching the end of the month without feeling that familiar knot of anxiety in their stomach. For another, it means having $2 million in a brokerage account. And for someone else, it might mean living entirely off passive income. The problem is, most of us use this word constantly without ever really defining it. Okay, let's dive into this. This is a real comment from the source material we're analyzing today from a user named Andrea, and it perfectly captures a very common yet incredibly dangerous illusion. It's the idea that wealth is merely a subjective feeling. Sure, on an emotional level, if you live in a quiet town with zero debt and a simple life, you might feel richer than some stressed-out executive in a massive city who makes 5 times your salary but is absolutely drowning in expenses and 12-hour workdays. Perception matters. But financially speaking, relying on a subjective feeling is a complete trap. Section 1. The Illusion of Wealth. Why Generic Desires Fail. Generic desires like, I just want to be rich, fail because they simply don't give you a roadmap. To achieve actual financial success, you have to establish the absolute core metric of this entire explainer, net worth. Seriously, throw away your ideas about a flashy salary. Forget about the luxury car someone might be leasing, or even the massive revenue their company generates. True wealth is strictly defined as what you own, your assets, minus what you owe, your liabilities. If you have a house worth $200,000 but a mortgage of $100,000, your net worth tied up there is exactly $100,000. That's it. This is the only number that truly tells you where you stand. Section 2. The 6 Levels of Wealth. Nick Maggiulli's Ladder. Now, a quick caveat before we climb. While his specific monetary brackets are rooted in the U.S. economy, the underlying behavioral logic is universally applicable. We're starting right at the bottom. Level 1 is defined as having a net worth of less than $10,000. And honestly, this is a state of extreme financial fragility. At this stage, every single dollar weighs heavily on your shoulders. You are always one unexpected event away from a massive crisis. A sudden car repair, a surprisingly high medical bill, or a missed week of work can completely destabilize your entire life. Because of that extreme fragility, this is strictly the survival stage. The absolute biggest mistake people make here is looking for a magic bullet. This is not the time to buy complex ETFs, day trade crypto, or invest in risky startups hoping to strike it rich. When you're at the survival level, your only priorities are stabilizing your situation, reducing bad consumer debt, and building a basic emergency fund. The goal isn't to become a master investor, it's simply to stop being so fragile. Once you cross that $10,000 threshold and move towards $100,000, you hit level 2. And wow, this marks a massive psychological shift. For the very first time, families actually get some real breathing room. You are no longer in constant survival mode, and that intense daily pressure finally begins to lift. This stage is perfectly described as grocery freedom. It basically means that when you go to the supermarket to buy food for your family, you no longer have to anxiously check the price tag of every single item. Buying a slightly more expensive brand of cheese isn't going to ruin your financial month. But a massive warning here. Please do not suddenly act like Warren Buffett. A lot of people save $30,000 or $40,000 and suddenly think they're sophisticated investors, jumping into complex real estate or high-risk trading. Look, you've built a solid base. Don't destroy it by trying to be a financial phenomenon way too early. Moving up the ladder, level 3 spans from $100,000 to $1 million in net worth. This is a highly comfortable bracket. It's actually where you'll find a lot of successful professionals, highly specialized employees, and small business owners. You have accumulated real, tangible capital. Welcome to Restaurant Freedom. You can go out to dinner, order exactly what you want, and enjoy the evening without mentally calculating the bill before it even arrives. It brings a real sense of lightness to your daily consumer decisions. But here is the massive danger of level 3. It's the illusion that you've made it. You have great stability, sure, but you are still entirely dependent on your salary. If you quit your job tomorrow, you absolutely could not maintain your current lifestyle for very long. Your capital now needs to be strictly aligned with a long-term financial plan, not just sitting around doing nothing. Section 3. From Employee to Entrepreneur. The Great Mental Leap. Moving beyond that $1 million mark usually requires a complete transformation in your behavior and your risk tolerance. It's the grand leap from employee to entrepreneur. And this brilliantly illustrates what happens as we hit level 4, ranging from $1 million to $10 million. The entire purpose of money changes. You weren't using money just to buy material items or secure your daily comfort anymore. Money now becomes a tool to buy life options. Maggiulli calls this travel freedom. It's the ability to book a trip, take time off, and enrich your life without agonizing over the cost or begging a boss for vacation days. You're buying options of time and location. But let's be real. Reaching this stage almost always requires business ownership or significant equity. And it is definitely not a permanent vacation. Entrepreneurs at this level are often working relentlessly to solve severe bottlenecks in their businesses. The true freedom here comes from the option to choose, not necessarily the absence of work. Then we reach level 5, the $10 million to $100 million bracket. This is actually where we see the biggest cultural differences in the source material, noting things like the sprawling, massive ranches available in the US compared to the higher density of European real estate. But regardless of your geography, the focus here is entirely on the massive, massive scale of this wealth bracket. This is house freedom, which is basically the ability to buy almost any dream property you desire. But I want to make this crystal clear. This level cannot be reached simply by putting a portion of your monthly employee's salary into an index fund. It's mathematically improbable. To get here, you need direct equity exposure in highly successful enterprises. It demands immense risk, bearing enormous stress, and managing incredible complexity. Let's just say it is not a passive journey. Finally, we briefly touch on level 6, a net worth exceeding $100 million. This is the rarest and highest tier, reserved for an incredibly small fraction of the global population who have scaled absolute mountains of financial and business risk. This is impact freedom. At this point, money has transcended personal lifestyle entirely. I mean, you already have everything you could ever physically want. Here, money is used to influence global systems. It's used to buy entire companies outright, fund massive philanthropic foundations, or literally shift political and social landscapes. Reaching this peak requires an extraordinary combination of extreme talent, perfect market timing, and outright industry dominance. Section 4. The price of freedom, the inconsistency between dreams and actions. Now, what's really interesting about this slide is that every single level of that ladder has a price in stress, time, responsibility, and risk. And unfortunately, there's a massive cognitive dissonance in how most people approach this. People constantly desire the outcome of a high wealth level, but flat out refuse to adopt the behavior required to get there. It's exactly like wanting a flat stomach, but totally refusing to go on a diet. People say they want the immense net worth of a level 5 entrepreneur, but they tightly cling to the safe, cautious, zero-risk lifestyle of an employee. They want financial freedom tomorrow, but refuse to cut back on their useless luxury consumption today. It doesn't work that way. Your actions must match your ambitions. Section 5. Planning your future. Transforming philosophy into mathematics. Listen, if you actually want to move up the ladder, you have to stop speaking in vague terms and build a real plan. To do that, you have to ask yourself these highly uncomfortable questions. At what exact age do you want to retire? Do you want to buy a house or rent? How much, to the very dollar, will your annual travels cost? Do you intend to leave an inheritance? Are you actually willing to take the brutal risks of starting a business? These aren't just fun lifestyle quizzes. These are hard data points. Every single answer you give produces a concrete number that dictates the exact net worth you are absolutely required to build. So the crucial point is this. The future is entirely uncertain. Inflation, market returns, your own longevity, these are all complete unknowns. Because of this, you cannot rely on improvised, piecemeal advice from a random YouTuber filming in their bedroom. You must actively plan for uncertainty by building out 3 specific models: a prudent scenario for when things go wrong, an intermediate baseline, and an optimistic scenario. You really have to test if your wealth can survive the bad weather. Which leaves us with one final thought to close out this explainer. Look at the ladder, truly understand the cost, the risk, and the extreme discipline required for each and every step. You don't have to desire anyone else's level of wealth, but you must be brutally honest about your own. So stop vaguely wishing for riches, look at the math, and ask yourself, what level of the ladder do you really want to reach, and are you actually willing to pay the price today to get there tomorrow? Take that question with you.